Well, Tesla's essentially been on a rocket ship since it got down to right around $100. And now the question doesn't become, is it going to hit 200? Because we already hit that. The next question is, can it get up to 300 or not? And guess what? Of course, the guys on Wall Street have an opinion. So we're going to discuss that today and their opinion. And of course, I'll kind of give you my take on this whole thing too, as well as we kind of go through the video. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And don't forget, for less than $1 a day, you too can take advantage of the Valentine's Day sale that ends today, because you know today's Valentine's Day, where you can hang out with me all the time, even when it's not Valentine's Day, because I got nothing to do today. Or you get to take 5 free courses, tons of exclusive videos, tons of discussion on virtually every stock out there, and a lot more. So make sure you check out that pinned comment and see everything that you get for less than $1 a day. And I got something super secret coming real soon for you guys, but we're not going to talk about that today. We'll talk about it a little bit later on. Just kind of wanted to tease it a little bit. You guys have been asking for it, so you're going to get it. All right, so let's jump into the video and see exactly what they got to say.
No worries. I also go by "Hey you" or "Oh no, it's him again." So that was close enough.
Well, we're thrilled you're here to
Bald
weigh in
guy
on this
jokes, I
big
don't
debate
know.
everyone's having over the data. And listen, from my point of view, it seems like the bond market's always leading, the job market's always lagging, and that's a worrisome sign. But you've had much more experience. What do you think is going on here?
Well, I tell you, I would increasingly go with the jobs markets, and here's why. Bonds are a hypothetical construct based on fear of interest rates or changes. Jobs are very real. What that tells you when you get to the real part is that companies still need more workers to keep up with demand. Now, granted, the composition is that is shifting from tech to hospitality, but it's a real number nonetheless. So I'm going to go with jobs every single day of the week. I don't care about the academic argument, recession or not. I think the Fed's got it wrong. Those models are busted. CEOs, on the other hand, particularly like Pepsi, they're getting it right.
So,
So a lot to kind of unpack there right off the bat in regards to what he said. You know, are we worried about a recession? Is a recession going to happen? We technically had one last year, guys. With 2 consecutive quarters of GDP going down, is a recession. Are we going to see that again? I don't know. We followed up that quote unquote recession, technical recession, with 3 really good quarters of GDP after that, or 2, really good quarters of GDP after that. So, you know, it just kind of, did anybody feel that recession? I mean, it sucked when inflation was going wild and all that sort of stuff. But, you know, it was nothing like everybody said it was going to be. It wasn't like 2008, 2009. We didn't see unemployment up at 10% or anything crazy like that. And kind of like we're talking about now, you know, you're seeing jobs kind of rotate from certain sectors. And, you know, basically we need more jobs in one area, less jobs in another. And that doesn't happen. Obviously, I guess, you know, the pandemic and everything else kind of, you know, rushed some of these things along and such. But, you know, that's kind of a weird construct to kind of see it kind of move from one to the other. Generally, it happens. It just happens over a much longer time frame. And we're not seeing that there. This has happened a lot quicker. But, you know, the unemployment rate being, what, 3.5, 3.4%, something like that, historically low. Not just, and it's been historically low, you know, basically this entire time, you know, basically for a year or two now. That's really, really those kind of indicators to where we're not seeing the traditional signs of a traditional recession. And I think that's kind of where he's getting at there. And actually, let's talk about the 3 points right there on the screen. You know, obviously, we are not out of the woods yet. I've been saying the same exact thing. Shockingly, I actually kind of agree with this guy a little bit here on all 3 of these as I read them. The world's best companies continue to put up numbers, and that's what investors should be focused on. And we've been saying that from the start. Every single quarter for the past 3 quarters now, it's been the earnings apocalypse and all this craziness. And even after earnings calls, you know, the media and YouTube and everybody's out there making all these different narratives and all these different takes about, oh, Jamie Dimon said this about, you know, the economy and this about the economy and this company saying that, all this other stuff like that. And I'm listening to those same earnings calls and I'm kind of going, okay, 1, that was taken out of context. 2, if you listen to the whole rest of the earnings call, they actually said the exact opposite of what the narrative has been. You know, instead of it being all doom and gloom, they've actually been relatively positive, cautious, but relatively positive. And of course, it's been backed up by the beats. You know, I mean, we've had, it's 60+% of the, you know, earnings this time around were beats. And it was over 60% last earnings season as well. So the numbers are actually bearing out, not true to what the narrative has actually been out there and such. So he's right. You know, look at those, you know, look at the numbers, look and see what they're doing, what the best companies are doing out there. Not saying everybody's doing great, but a lot of the companies still aren't struggling, you know, basically a year into this whole earnings should fall off a cliff type narrative that's been out there. And of course, you know, when in doubt, zoom out. I agree. We always say that all the time. Zoom out, look at where we are historically, look at where we're going long term. You get so caught up in the short term and, you know, very, very narrow focused. And that's how you end up freaking out when, you know, Tesla makes a huge up or makes a huge move down. Tesla now is still at a great price, even at $200 historically, and where I think it's going long term. I was very happy to buy under $200 whenever we got a chance the first time, well before it dropped all the way down to, I had no idea it was going to drop down to 100, almost under $100. Nobody had any idea about that, but I was happy to buy it then. Why wouldn't it a couple of quarters later, now that Tesla's performed even better and, improved everything across the board? Why wouldn't I now want to own it, at that same exact price point that we're at right now? So exactly, when in doubt, kind of zoom out and it'll kind of give you that perspective on where we're at.
Into definitely some of the stocks that you like here, because actually Tesla is one of them, which a lot of people will find interesting. But one more question about the labor market. I also, in a way, wonder how much better can it get from here, right? Are we just going to stay at these historic levels of jobless claims? Are we going to stay at record low unemployment? It seems like the only way to go from here is worse. And then wouldn't you want to be fading that, from the market's point of view? Inevitably, I don't think it can get any better.
Let's fade historically low unemployment. This is the reason why Wall Streeters and when I hear them, I cringe. This is why they're wrong so often. It's when you're historically low, we need to get back up to normal before we can discuss something that would actually negatively affect the economy. Right now, having that low unemployment is causing other issues within the economy. Not major issues, but it's causing other issues. And seeing the unemployment rate get up to 4.5, something like that, would actually help the economy normalize even more, which of course is a good thing for companies, not a bad thing. It's not like all of a sudden if it were to go from like 4.5 to 6, okay, yeah, that's a problem. And we could obviously then at that point in time see earnings and other things, start to erode from these companies. But seeing unemployment just get back to normal from an unhealthy too low to a healthy where it should be, that's not something you really fade, or quote unquote, get defensive on stocks or whatever the case is, wherever the heck she's going with this. It just doesn't make any sense. Anyways, you guys know about that. It's Wall Street. Whatever.
Well, instinctively, of course, you're going to want to fade it because that's what your guts are telling you. But what we also know from research and a huge body of history is that the markets have an upside bias. You find treasure at the bottom of the ocean, and typically,
it's also basically rigged to go up over time as well. But it's not a bias. It's actually rigged to do that. So that's the reason why shorting. I've never understood why anybody would do it outside of a very specific play for a very specific time frame, because the game's rigged against you to lose if you do that. So.
That's what happens when the markets drop. So if you're sticking with the right companies, the brand names, the CEOs who are moving forward, I would submit over time that's the better and arguably the more profitable play.
Well, as we often know, you can kind of get the macro right or wrong, but still make plenty of money if you're in the right trades. For instance, Tesla, you stuck your neck out on this just at the right time. You still a fan of the stock?
Oh, absolutely. I think this thing is just getting started. Anybody betting against Elon Musk, whether they like him or not, that's moot. But anybody betting against Elon Musk today might as well have been betting against Steve Jobs back in the day. We know how this is going to play out. He unleashes just incredible transformation in every industry he touches. He's not getting stopped anytime soon. He's got enough money to do what he wants. He's got a clear vision. I'm very excited. I think it goes back to 300 a lot quicker than people think.
Let's talk about.
There we go right there. I mean, he laid out a great case there. I don't know if it's, definitely approaching that kind of Steve Jobs whenever he was at, kind of his peak in terms of what he was doing and such like that. But he's absolutely making a great point there that, hey, a great stock with a great CEO who has set themselves up properly, who was disproportionately beat down, is set up to run, and you don't know when that's going to end. Trying to just use technical indicators on a stock that is broken out from again, it kind of broke technical indicators when it had its fall down. It was just kind of like cratering down, and then it kind of runs up. And historically, we all know that, right? I mean, Tesla would like double up and then fall 40%, all in like a 3-week span. It was crazy times, and that's kind of been Tesla, kind of the way it moves. So absolutely, he was right there. And there, again, she's discussing trading, he's discussing trading, kind of. And again, we're not traders, or at least I'm not a trader here. Some of you guys may be. I'm not. I'm a long-term buy and hold investor, so I could care less about, trying to make the trade, trying to stay in the trade and all that sort of stuff. I'm in it for the long haul here. I just want cheaper shares whenever I can get those cheaper shares. And obviously, we were given a gift earlier. But it's kind of interesting to see the take there of somebody who is definitely a trader, but absolutely still saying that, hey, there's something more here than just the trade. He's not interested in just the trade itself. He's talking about things that, speak to us as long-term investors. Kind of keep that sort of stuff in mind as you're kind of seeing some things like that. He's giving us all kinds of indicators that, hey, this isn't just a great trade, it's a great stock.
for a moment, because a lot of investors the last couple of years have learned that it doesn't just matter if you like or don't like a stock. It matters where you enter and where you exit. Why not take the profits now? Why say I'm staying in this till 300, and would you really not get out at 2?
I'm a long-term buy and hold investor. That's why I'm not selling and taking my profits right now. And as we've seen, a lot of folks, all over the place on CNBC and YouTube and everybody else, took profits a long time ago, and they missed out on all this run up since then. So I don't know. I'm not taking profits.
50 or 270 or 280 if we get up there?
Well, every investor is different, of course, and that depends on what your unique risk tolerances are, your profit objectives, et cetera. I'm a big fan of when you have a double, you take half off and you let the remaining shares run for free, because now you've paid for your initial investment, you're still in the game, and you can continue to add more later if you want. So it's not a question of all or nothing, Kelly. Take some.
That's a trading strategy that I've used in the past as well. Now, notice that I said trading strategy. Definitely something I do in more speculative plays. That kind of, hey, I think the stock's great, but they're pre-profit and a lot of other things like that. Sometimes I'll do that, and kind of see, hey, where's this thing going to go? Is it going to keep going? Is it going to come back down? Then at that point in time, you're kind of playing with house money or whatever. I don't do that, however, with my long-term buy and holds, because that has just crushed me in the past. I've learned that lesson. Warren Buffett's learned that lesson. I talked about it in past videos, the same exact thing, so I won't repeat it here. But I've learned that lesson many, many times before. So that's why I don't do that, because in the end, I'm not a trader. So that's just not what I do.
Off the table if that makes you feel good, lets you sleep better at night. Nothing wrong with that strategy whatsoever.
How does that get you to a Pepsi, to a Lockheed Martin?
I won't lie. That's a very good point right there. In the end, it comes down to what you can sleep with in the end. That's the reason why a lot of times, anytime we're discussing valuations, or should I do this, or should I do that, or should I own Tesla, should I not own Tesla, how much Tesla should I loan, all those sort of questions like that, well, it really comes back to you. That answer is different for me than it is for you, than it is for somebody who's 65 versus somebody who's 25, than somebody who's, nervous person who, any movement, the stock freaks them out, or somebody else who's super high risk. I want to, willing to go all in all the time and gamble, all those different factors, your income level, how much, you've taken care of your finances, how much do you have to invest each month? All those factors all factor into, and more actually, risk tolerance, all kinds of things factor into what is that right answer for you. So, a lot of times that's a lot of we're discussing in our group, we're discussing stock, kind of going back and forth on a lot of different strategies, a lot of different things to do. And a lot of times it comes down to, what can you sleep with? If Tesla does X, would that bother you? If Tesla does Y, would that bother you? How would you feel? And kind of working through that scenario, so that way every single investor can feel comfortable. It's not like, if my portfolio goes up, we'll say 30% and yours only goes up 28%, you're a failure. It's just silliness. It's not a race against anybody else. It's a personal race between you and yourself. And so therefore, if you can sleep at night and you're only making 20%, and somebody else can sleep better or sleep just as good and they're making 30% because they're taking on more risk or playing in riskier plays or whatever, you're both winning at that stage. That is winning at both levels. It's much more important to be picking the great stocks and the right stocks for you and the right mix of stocks and doing your evaluations and making sure that you're not speculating and trying to time the market and all this other stuff like that, instead of trying to worry about, hey, somebody else owns 50% Tesla. Maybe I should own 50% Tesla too. That may not be right for you at all. I know that's most certainly not right for me, personally. So that's just kind of becomes that very, very individual thing. And he's right. In the end, you need to be able to sleep with the investments that you make. And that's exactly how you need to invest and build your plan for your investments.
Seem like the more traditional names we might hear from. Again, that's why I highlight Tesla, because I think it's a much more provocative one. Pepsi had earnings this morning, stocks up 1%. Lockheed, obviously, defense has been doing pretty well lately. Why those two?
There's a different scheme in every stock. They've got different signatures, if you will. Pepsi and Lockheed, to me, are all about stability and ongoing demand. People like their soft drinks. They like their snacks. Pepsi is a solid company with great management, solid consumer demand, capable of handling inflation. So that's why I like that particular name. Lockheed Martin is a similar vein of thought, but slightly different. The world is a very complicated place right now. U.S. defense stores, munitions are down considerably. And, you can argue about the politics of that. But again, I like to stick with the real numbers. And what I know is that we're going to have to replenish all of that. And that's great for a company like Lockheed Martin.
So great point there at the end to kind of wrap it up there in regards to sticking to the actual data and staying out of the political narratives and such, because political narratives just drive you down different trains that don't always end up in the best investment or looking in the right spot for what is the best investment, stuff like that. So you guys know I don't do that stuff at all, so I'm not going to discuss it. Again, I don't know if I would love to own Pepsi, Coca-Cola. Some of those stocks I know historically, based on valuation, they are trading very, very, very high. So I'd like to see those come down before I add to those, which, traditionally, maybe some of those, small cap, mid cap stocks, higher risk plays will start to run while some of those plays kind of start to kind of, eventually the market does all come down to fair valuation, and they start to come down to fair valuation to where, hey, I may not be wanting to put money on these while they're on a run, and I can start putting my money towards those. But, in regards to Tesla, is it going to be 300? I wouldn't be surprised if we see 280, 300. I wouldn't be surprised if we saw it retest that 100 again. That's just kind of what Tesla does. Do I think in general, am I going to see Tesla at 300? Absolutely. If I didn't, I wouldn't own the stock right now. I would be trading out of the stock if I didn't think that. So, 400 wouldn't surprise me by the end of the year. It just wouldn't, because Tesla is that kind of stock. They're growing at that pace. They're making moves. They've made a lot of the right moves. They've had some missteps, but for the most part, they're making the right moves in the right directions, and just creating demand like crazy. And we're seeing it. They're crushing in terms of performance, the competition that's out there. And I'm not saying ICE is going away or anything else like that, or anybody's going under, and Tesla's going to be $47 trillion tomorrow, or anything crazy like that. I'm just saying right now they are executing on a very high level, and I have no reason to think that they will not continue to execute on that throughout the year. So yes, I'm very, very comfortable saying that, hey, we will see Tesla at 300 this year. When, I don't know, anybody who tells you they know, they're all freaking lying. Just, yeah, okay, you're right. You can guess the tops and the bottoms, and you knew it was going to 100, and now it's going to 200, and then you're going to tell me, well, you're going to know when it's going to 300, whatever. I don't engage in those sorts of games. And if Tesla doesn't reach that, but they continue to execute, I'm going to be a super happy investor, because that means I can just buy shares super cheap. I can just load up on more Tesla while the market continues to be stupid. And trust me, when Wall Street gets stupid, that is where actual wealth is built. That is where real wealth is built. So I am happy to see Tesla perform and Wall Street get stupid. Please beat it down to 100 again. I will be a very, very happy camper. You will not see me panicking at all. You will see me loading the boat just like we were back in November, December, and the beginning of January. And remember, the Valentine's Day sale is live, and it is ending on Valentine's Day. If you want to take 5 courses for free and be able to interact with me, be on our live Q&As, we got tons of lessons and exclusive videos and a whole lot of other things in there for you to use and to become a better investor. And click this video here if you want to see the 10 most important stocks in the stock market, and click here if you want to see exactly what I'm doing in this market. So thanks for watching, and we'll see you in the next one.